What's up, traders? Welcome back to my channel. I remain your boy Skid FX. So in today's video, we'll be looking at volatility trading strategies, right? So in my previous video, I've talked about synthetic indices trading strategies, where I established some simple strategies that you can use as a beginner or someone who is still struggling to gain consistency in the market to actually scale up. So if you have not watched those videos, you can actually go back to my previous video to do justice to that. So today we are taking a step further by looking at some advanced terminologies or strategies that we can actually use to improve the quality of our trade. So if this is your first time of viewing my content, kindly make sure you subscribe to the channel and share this video so that others can actually learn and benefit from it. So without wasting much time, let's get started. So to understand these strategies better, we are going to be considering this following terminologies. We are going to look at an order block, a demand and supply, FVG, and entries, right? So starting with an order block, what does an order block represent in the market? I'm sure majority of us must have been hearing of this order block, demand and supply and all, but in a more logical sense, can you literally tell yourself that you understood what these things mean without the chart? So whatever is happening on the chart is actually a fight between the demand and the supply, or what we call the bulls and the bear, or what some persons may call the buyers and the seller, right? So I am going to break it down in pieces so that you understand what these things represent on the chart and how you can actually implement them while making your trading decision. So starting with an order block. An order block can be a bullish order block or a bearish order block, right? So what does an order block represent, or how do we define an order block? An order block is the last bullish or bearish candle before a massive push to either the upward direction or the downward direction. Having established this definition, now let's practically identify what a bullish order block is and what a bearish order block is. Now look at my schematic here. You will notice that there is a bearish candle before we start having this particular push to the upward direction. Now this bearish candle is what we call a bullish order block, right? Because it is the last bearish candle before a massive push to the upward direction. So this particular candle is what we call a bullish order block. Now when you look at this particular one, the last bullish candle before we start having a drop to the downside is actually this candle, right? And this candle represents what we call a bearish order block. So in summary, a bearish order block is the last bullish candle before a massive drop to the downward direction, and a bullish order block is the last bearish candle before a massive push to the upward direction. Now, what is your expectation as a trader whenever you see an order block? An order block works in this sense. Whenever you notice that there is an order block, or what's come about an order block is a way that traders use to follow the institutional order flows, like the way institutions are making decisions. When I mean institution, I'm talking about the large firms or group of persons that have the potential to influence price by imputing a very high amount of orders in the market. Okay, so the way we study or the way we follow their footsteps is by understanding this terminology or this idea of an order block, right? So what happened is there are orders around this particular region that has not been filled up. So order block is that thing that is telling you that there is higher probability that price will return back to this particular level again for this order to be completely filled up. So having said that, like I said, the expectation whenever you spot an order block is price need to return back to it, and that's why you are seeing this particular schematic, that price return back to this zone, tap into this zone or react from this zone, and then continue in the desired direction. In a similar way, for the bearish order block as well, you see whenever we have this push to the downside, it's an indication that there are orders here that has not been completely filled up. So what happened is price will tend to return back to this particular zone again to complete this order and then continue in the desired direction. So that is basically what an order block represents in the market. I hope that is taken. Now let's take a step further by understanding what is a supply and what is a demand. Now this word supply and demand order block, they are used interchangeably because they are actually similar in one way or the other. Now I can tell you that a bullish order block is a demand candle and a bearish order block is a supply candle. So with this, it is easy for us to conclude that the explanation I've given to you for bullish order block goes towards a demand candle, and the explanation I've given to you for a bearish order block goes towards a supply candle. Now there is something people call demand zone or supply zone. A demand zone is no longer a single candle, right? A demand zone is no longer a single candle. A demand zone becomes an area like what people call support and resistance. So such a thing can be called a demand zone because we have multiple candles within that region, and price we tend to respect those particular zones, right? But that is not our case of study today. We are just focusing on order block supply and demand. Now that you've understood what a supply candle is, what a demand candle is, and what an order block represents, like I said, they are used interchangeably. Now let's take a step further by looking at what is an imbalance or what is FVG. Now FVG simply means fair value gap. Some persons call it imbalance in the market. Okay, now what is happening on the chart is a fight between the bull and the bear, or a supply and what the demand, right? So it's a fight between two sets of persons. A group of persons is saying price needs to go down. Other set of persons are saying price needs to go up. So at the end of the day, if price tends to go up, we say that the buyers are winning. If price tends to go down, we say that the sellers are winning. Now, to understand imbalance, you need to look at it from this perspective. For every order in the market for a buy, there has to be a corresponding order for a sell. For every order for a sell, there have to be a corresponding order for a buy. In a situation whereby the number of order for a buy does not equate the number of order for a sell, then it becomes imbalanced. The way you can look at it is if you are a business person or someone who is into retail trade, like you sell some items, the items you are selling, for your business to be stable, for your business to make meaning to you, there have to be people that are in need of those items that you are selling. But in a situation whereby everybody is selling what you're selling, right, there is nobody that is willing to buy, then there is a problem. The business will not make sense. The business will not succeed. Okay, so that is exactly what is happening on this chart. For you to say that an order is balanced, the number of sales has to be equal to the number of buys. So, and how do we identify these things on the chart? You can use 3 candles to actually identify a state of imbalance in the market. So let's say we are going to pick this candle. This is the starting point of this particular candle right here, and then we'll be using 1, 2, 3 candle, right? Once you pick 3 candles, you can easily tell whether there is an imbalance or not. So this is the closing point of this particular candle right here. This is the closing point. Okay, you can see the gap between the closing point of this candle and the opening price of this particular candle here is what we call an imbalance. So between this point and this point, we have what we call an imbalance. Now let's pick this bearish candle, this candle, and this candle, and see if we can get an imbalance. So this is the closing point of this candle, and then this is the opening price of this particular candle. You can see that there is a gap between this point and this point. So this gap is what we consider to be an imbalance. Now, if you come to this second diagram, you will see that there is also an imbalance in between these three candles. The first candle, which is the bullish candle, this particular candle, and this particular one. Now, this bullish candle closes here, okay, and the next candle opens here. The gap between this, the opening of this candle and the close of this candle is what we consider to be an imbalance. Now, what is the implication to, or what does a trader derive from this knowledge? What are they expecting from having this knowledge? The idea of an imbalance is to tell you that there are orders that is yet to be filled in the market. Those orders needs to be filled. And what I mean by filled order is, for this push to happen to the downside, there are sellers around this particular region. And like I told you, for every seller, there has to be an equal buyer. For every seller, there have to be an equal buyer. Okay, so price needs to come back to take those orders for this market to be effective. So that is one thing. So having that at the back of your mind, and you already know that order block also is one of those symbols that tells you that price will return to a particular area again, you will have to position yourself and wait for that price to come back to that particular order. That is why you see that the arrow price needs to move back to this particular thing, as at this point all of this order would have been filled, and then price will continue in the desired direction. So I believe we all understood what a fair value gap is, what an imbalance represents in the market, and also we can now tell when you hear the word supply and demand, it will no longer be a news to you. Okay, now we want to look at POI. What is actually POI, or entry? Entries means where exactly are you making your trade decisions from? You've done your analysis, you've understood supply and demand. It's time for you to make a trading decision. Where exactly do you want to enter from? So that becomes your entry point. Based on order block, an order block can be your entry point, just like what I have marked here. So based on my markings with this schematic, this particular block here becomes my entry point. So I will be entering from here for a sell, and I will be entering from here for a buy. So entry does not really it's not something difficult, but it's something that you need to do with precision. So some persons may use what we call pending order for their entry, but me personally, I prefer using confirmation candles. That means that when price gets to this particular block, I don't just jump into the trade. I wait for price to give me confirmation before I enter. So let's look at the chart and see if there are places where we can easily look at this order block. Okay. Now remember the definition of an order block. We said this is the last bullish or bearish candle before a massive push to the upward side or to the downward side. So now let's look at this particular candle here. This particular candle that I have selected represents a bullish order block because it is the last bearish candle we are saying. This is the candle I'm talking about, this particular one, before we start having this huge momentum candle. And what happens to it? Price decided to, yes, I'll be explaining everything I have marked out in the schematic for you to see. We have been able to identify what? An order block. Then what's next? We say we can also consider what we call imbalance. An imbalance can be seen between three candles. This is one candle, two candle, and three candle. So the close of this, so let's say this is the close of this candle, this one, yeah, although this is not the close, this is just a rejection, but this is the height of this candle, and then this is the starting point of this new candle, right? You can see that there is an imbalance here, so that makes my order block to be a valid one. Now if you extend it further, you will see that price came into this block and give a very good candle confirmation. Do you see? And what happened? Price decided to start buying all the way to the upward direction. Yes, there was a retracement that happens, but still, price did not break below this particular point. So if you are entering here, obviously your stop loss would have been around here, and this would have been a winning trade for you. So let's look at other areas where we can spot this, where we can spot demand or supply. Now look at this particular point here. This is the 24-hour time frame. So if I go to a lower time frame, I'll be able to see more clearer stuff. You see, price came back to this particular point and then sold all the way down. So this is a supply. This is a supply, right? It is the last bullish candle before price starts selling to the downside. Okay, look at this region as well. This is also a supply candle. This is also a supply candle here. Let me zoom so that you'll be able to see them clearly. So this is the candle I'm talking about, this particular candle with wick. So price came back to it and then sold to the downside. You can see this is a good sell, right? If I use my sell order to check, you will see that this thing is already above 1:3 RR. Okay, so that is actually a good sell. Let's look at other places. There are so many. I think there are some trade that I took using this particular strategy. This is an entry that I missed on this trade. I'm currently holding this trade and it's running in profit. This is an entry that I missed on this trade. You see, if I go to the 15-minute, this is actually a good bearish, what is it called? A good supply candle or bearish order block. And price reacted to it and sold all the way down. Now, my first entry, which is from this point, is also based on this particular order block from here, and you see how price reacted to it and start selling to the downside. So that is pretty much about order block. I don't want to make this video too lengthy. There is another trade I took, I think is on jump 50. So you see that these things are actually playing out almost everywhere on the chart. Look at the candle that I selected. Look at the candle. So this is the supply candle, and price came to this block. I waited for good confirmation, and you see that price is actually selling to the downside. If I go to the 15 minutes time frame, I would have seen another, maybe this reactions here is from other area, and this is the area where price reacting from. This is the last bullish candle before we have this drop to the downside, and that is exactly where price is currently reacting from. So if you understand this particular strategies, you'll be able to make good trading decisions. So this is where we'll be stopping. I hope you enjoyed this video, and don't forget to like and subscribe if this is your first time of viewing my content. And also, if you don't have a trading account, the link is made available for you in the video description. Set up your account, join our Telegram channel, and participate in our free live classes and seminars. So this is where we'll be stopping today. I hope to see you in our next video. Peace out, guys, and honor skid cares.